Yo guys, I'm Kenwilboy, and in this video I'm going to discuss how to start Forex trading for beginners in 2024. So this video is a full tutorial for beginners so they can learn and become professionals probably one day. But yeah, this video is complete from A to Z. Let me introduce myself first before it begins, because this is actually my first video in English. My YouTube channel is mostly in Indonesia. Let me introduce myself. I'm Kenwilboy. I'm a professional trader with 4 years in portfolio in Forex trading. I've been trading since 2019. Yeah, 4 years, about to go 5 years. And I own one of the largest trading community in Southeast Asia called Kenwilboy FX, with more than 1,000 students in our portfolio. All right, let's just dive straight into it. Okay, first, let's see. What is Forex trading? This is for beginners. Forex trading is actually buying and selling contracts of currency, or currency contracts, or commodities contracts. So you're actually just like buying, like in money changer, you exchange money. Yeah, that's the same concept behind it. But with technology, we are trading in brokers. The brokers gave us, like, they loan us some money, so we can buy and sell currency or commodities way bigger than our capital. Like, for example, we trade with 1 to 100 leverage, means we trade 100 times our capital. If you have $100, means you can trade $10,000 in your desired currency or commodity. Commodities such as gold is popular. And 1 to 100 is still small. Big one, you can go maybe 1 to 1,000. So you can buy $1 million worth of contracts with just $1,000. It's amazing. Yeah, so that's Forex trading in a nutshell. And let's just, if you don't want some theory, too much theory, let me show you the result. So this is my portfolio or trading history. This is my account, one of my accounts. And I managed to grow this account from, you might not believe it, but believe it or not, this is real. I grow this account from $100 to $52,000. Look, take a look at the bottom right corner, $52,000 in profit. Let's see the top left, 52,100. Means the difference is only 100. Yeah, the difference is my capital, my initial margin, or my initial balance, $100, and I managed to grow it, compound it until $52,000. I trade mostly on gold or XAUUSD and NASDAQ. NASDAQ is US 100. NASDAQ is the stock index of US, one of the largest stock exchanges in America, in US, called NASDAQ. So we usually call it NASDAQ, but actually the index of 100 biggest technology company in United States, more precisely in the NASDAQ stock exchange. All right, so this is my portfolio. So what I'm about to tell you here is actually my experience. I'm not just like theory, teaching something. That I'm actually like, I do what I talk. Yeah, that's the most important part, because I see a lot of gurus, a lot of mentors on the internet, on YouTube. They're just telling, you know, theory, but they don't actually practice what they said. We can judge them. We can look at them, which one is the right mentor or the bad mentors. Just ask them, where's your portfolio, or where's your trade history? Most of them don't have, because maybe they're using like a demo account to do some promotion or something. If me, I'm actually have nothing to sell you guys. So this is just me wanting to help you. All right, here, this is my profit. And I know what are you guys thinking. So how do you get those profit? So how do you analyze which technique, which strategy you use? So first thing first, in order to start Forex trading, you need to, number one, you need to have a good brokers. So which one is good? There's thousands of brokers all around the world. If I tell you this one is good, this one is bad, good, bad, this video is not enough. A lot of brokers there's like pros and cons. Some brokers offer higher leverage but higher spread, some low leverage but higher spread, and there's commission, different things. Yeah, so which broker is good depends on your capital, depends on who you are, depends on your goals. So the good one, I want to like warn you about these three things about brokers. First, you cannot trust review website. Sometimes review websites say this broker is the best, this one second, this one third, this one good. You cannot trust. Why? Because a lot of review websites, they can be paid. So they ask the brokers, give me some money, and if they pay, their ranking or their rating goes up. So it's not neutral. Maybe they're not wrong, but they're not neutral. I know one of scam brokers. I won't tell you the name, but I know there is one particular scam brokers, but they have very high rating back then. And it turns out after running for a couple of years, people find out that they're scamming people and suddenly their rating goes down. So review websites, you cannot trust 100%. It's good for like comparison, but don't trust 100%. Second, you cannot trust someone promoting a broker like, oh, this one is best, this one good, this one bad. Most of them, they're just like marketing salesmen. You cannot just blindly trust yourself. And the only way, so how, if I cannot trust anybody, how do I find a good broker, good apps to trade with? The only way you can find like a broker that is actually good, that you need to go into a community and you need to see it by yourself which broker people actually use. So it's not just, oh, this is the best, this is the best. No. You need to see which broker people actually use, because usually the good one, people are using it. So just like eating. People are eating the good food. They won't eat the bad food. Maybe they try once, twice, but they won't repeat. So in order to start, first you need to find a good broker. Second, what's the next step? You need to have a good strategy. So strategy is used to predict the market. Is this going up or down? Actually, trading is very simple. Yeah, Forex trading is simple. Easy if you know what you're doing. If you predict, if you think the market about to go up, you buy. If you think or you predict the market about to go down, you sell. As simple as that. And if your prediction is correct, what do you call it? Your analysis. Yeah, your analysis is correct, means you analyze and your analysis said, it's about to go up. You buy and the market goes up, you profit. You buy, but the market goes down, you lose. You lose money. As simple as that. And for sell, it's the opposite. So which strategy I actually use and it's actually good? A lot of people said, this one is good, this one is good. But they're not actually using it. If me, you can see my portfolio, trade history. Look at this. Last 30 days, my profit is 16,000 USD, bottom right. All right, which strategy I actually use? In order to explain, I need to switch apps to TradingView. This apps is you cannot execute. This app is only for analyzing the market, for technical analysts. So this strategy is called Kenwilboy Alert. So I use two indicators, let me add. So this is what I'm using. I use two indicators called Kenwilboy Alert Ribbon and Kenwilboy Alert Signal. So how do you use it? It's actually pretty simple, fairly easy. If the ribbon is green and there is buy signals, means you buy. The market is about to go up. And if the ribbon indicator is red, especially the thick ones, thick means it's a very strong downtrend, and there is sell signals, means the market is about to go down. And you may sell, you should sell. Simple as that. Take a look. It's green and there is buy signals and the market goes up, and the opposite. It's red and there is sell signals and the markets go down. Yeah, that's my strategy in a nutshell. There is a lot of strategy here and there, but this one is one of the easiest, but also high accuracy. Usually the easy one is not accurate. The accurate one are hard usually, but this one is like the sweet spot. Not too hard, but it's also pretty accurate. But it's easy for beginners to learn. Yeah, that's my strategy. But this strategy, there is some weakness. Take a look. Sometimes there is buy signals, or sometimes happens like this. Yeah, like this. Or yeah, like this. There is sell signals, and the ribbon is red, means you should sell, right? But it turns out the market is not going down that much. It goes down a little bit, and it goes back up. Means if you sell here, you would lose money. So how do you manage that? I use another technique. This is called layering. This is one of the entry technique. One of the technique for entries. Layering, the concept is simple. I will show you some diagram here. The concept is you buy, and if you lose, you're in a floating loss, or you lose some money, you're not closing that position. Instead, you open the same position or the same direction. Like if you buy, and you need to buy again, but twice the amount previously. That's the concept of layering. What is the purpose? The purpose is to, when the market, for example, you buy here, you predict the market is about to go up, you analyze, suddenly it goes down. At the moment you see it's about to go up, you buy again twice the amount. What is it for? Why it need to be twice? Because we want to cover the losses. If you use this layering technique, maybe you open like this one, 1, 2, 3, 4 position, or maybe this 5 position. The previous 4 position is losing, but the 5th position, because the size is so big, the market only, this one we're telling like in a buy. We're talking about buy position. Because the 5th position is so big, the market only needs to go up a little bit, and it will cover all the losses from the previous position. So you don't need to go back to the previous price, the first entry price. No need. Just a little bit up from your last entry, and all your losses is covered. It's not even only covered. It's not only break even, but it's profiting. So buy, go down, buy, go down again, buy again. Goes down again, you buy again, goes down, buy again, but suddenly it goes up a little bit. All your losses becomes profit. That's the concept of layering. This one is for buy position, and this one is for sell position. See, on the last position, after the 4th entry, we can see the gross profit from the 4th entry is $80, but the net profit becomes 10 because the other 3 entries are losing money. See, losing $10, 20, and 40. Total 70, and the last position is profiting 80, means the net is 80 minus 70, 10. Yeah, that's, if you don't understand, just repeat again. Not a lot of people teach this because this technique is dangerous. Yeah, I know it's dangerous. This one is risky. Let me tell you that. Why? Because in no time, you start opening position small, but in no time, suddenly your position is so big. That's why it's risky. Because sometimes your capital is not enough to hold the floating loss. So what do you do? This method is risky. Yes, I know it's risky. So you need to pay attention to these 2 things. First, you need to pay attention to your money management. What is money management? Money management means you limit your lot size. Don't open too big, start small. Yeah, just like everything, start small. My recommendation is every $100 you open 0.01 lots. If you have $200 in your balance, means you start opening at 0.02. You can. If you want to open 0.1 lots, how many dollars do you need in your trading account? You need 1,000 because 100 times 10 is 1,000. 0.01 times 10, it's 0.1. That's the first thing you need to know in order to minimize the risk. Money management. Start small. Especially with layering, you need to start small because with layering technique, it will go big so fast, so quickly because exponential. Like you times two, it's gonna grow so big, go so fast. Yeah, so you need to start at the smallest possible. Layering, if you're using layering especially. Second thing you need to pay attention is stop losses. A lot of traders I see here and there, they're not using stop losses. Who experienced this? Or maybe if you try trading, sometimes people, or most people, for example, they buy, they go entry, buy, enter a position, buy position. If the market goes up a little bit, they close the position so quickly because they don't want to lose that profit. But most people, when the market goes down in a buy position, they won't close it. They're afraid to cut losses. What did they do instead? They just hold. They pray that the market is about to go up again. No, don't do that. You need to have the opposite mindset. When you reach a certain losses, it's better to cut our losses instead of losing, blown away all of our account. Margin call, MC. Yeah, it's better to cut loss than blow everything. So that's the key. Don't forget the two-part, that one. If you want to learn more about Forex trading or trading in general, because we are not only trading Forex, we are also trading crypto, please check the link down below, Kenwilboy FX. We are one of the largest trading community in Southeast Asia. So we're right now expanding globally. That's why we're in English language video. Not only education. Education is, of course, it's good. We can assure that, we can guarantee the information, the knowledge is incredible, it's amazing. But it's not only for education. Education is good. But this one is better. You're not only getting education, you're getting signals from professionals, from our team, professional technical analysts, the best in what they're doing. Because we actually hire, we trade in gold, XAUSD, we hire the best analysts for gold. We also trade in Bitcoin, BTC. We hire the best analysts in Bitcoin, in crypto. So our signals is amazing, 90% plus accuracy. You also get indicators, our custom indicators, free update lifetime. You get discount on trading fee lifetime on several regulated brokers, the best one, the good one. And also you're getting one of the best trading groups and communities the world has ever seen. Yes, we can guarantee that. Our group is one of the most active, one of the best, one of the largest in Southeast Asia. So what you waiting? Right now it's on promo, limited promo from $100, only $4. Yeah, limited. So come and get it before the promo expires. All right, link down below. Don't forget to like, subscribe, and hit the bell icon. And peace out.